Welcome to Patrick Boyle on Finance. Today's episode is an interview with an old friend of mine, Adam Robinson. Adam has possibly had the most interesting career of anyone I know. He was a teenage chess prodigy who trained with Bobby Fischer as Fischer prepared to play Boris Spassky for the 1972 World Championship in what has gone on to be known as the match of the century. He later got degrees from Oxford University and UPenn Wharton. He cracked the SAT and other standardized tests, launching the Princeton Review Company, which he later sold. Adam was an AI pioneer, a quantitative trader. He and I worked together in the early 2000s. He is a New York Times best-selling author and an all-around master of strategy. His company, Robinson Global Strategies, provides macro research to some of the world's most successful hedge funds. Adam is hugely respected by everyone I know, and I was fortunate to get a pre-publication copy of his book, How Not to Be Stupid. He didn't ask me to endorse it. One of his other friends, some guy named Warren Buffett, says that it's loaded with good ideas and appropriate warnings. While this episode is a bit longer than normal, I'm sure that you'll find Adam as fascinating as I do. Today's video is sponsored by Compounded Daily, a newsletter written by industry experts like my friend Darren, who runs the How Money Works YouTube channel. I write occasional pieces for them too. One of the difficult things about YouTube is that you have to make content that the algorithm likes, but sometimes the most insightful pieces are not a good fit. Compounded Daily is filled with insightful finance and business stories and perspectives that you just won't get from people who haven't worked in the financial industry. I'll be writing up my thoughts on this interview so you can get my perspective on it tomorrow by signing up for Compounded Daily today. Whether you're a financial professional or just looking for a great source of business news, head over to compoundeddaily.com to sign up for the free newsletter. I can't recommend it enough. Sign up using the link in the description below. It's totally free, and if it's not providing value, you can unsubscribe at any time. Without further ado, let me introduce my friend, Adam Robinson.
Hi, delight to be here.
It is great to have you on. I sort of know that my audience will find you absolutely fascinating, so I'm delighted to have you here today.
I have been a huge fan of your podcast for eons.
Oh, thank you. Thank you very much. So I should probably tell the audience that you and I know each other quite well because we worked together for probably about 3 years when we worked for Vic Niederhofer.
Yeah.
And sort of sat next to each other in the office and chatted all the time and grabbed lunch together and so on. But a funny thing is that, having worked with you for 3 years, time moved on and I kind of heard you interviewed on various podcasts and so on. And I learned that you had all of these amazing stories that you never even bothered to tell me.
Well, a lot of the amazing stories happened post that period.
Well, you've had actually a really interesting life, and I guess one of the things, we'll talk quite a bit about finance in a moment, but one of the things that I think of you as sort of maybe a strategy guy almost more than anything else in that you sit and you think out like what's the best way of approaching this problem much more. There's lots of people and they approach lots of problems in a sort of haphazard way while you sort of pause and you think and then you do a thing. And I guess for that reason, you found yourself in so many interesting places.
Yes.
And one of my questions for you almost is kind of how can someone live as interesting a life as you've led? Like, what's the strategy for that?
We may have to circle back to that one because it's nothing I've reflected on. It's just the life I've led, right?
Yeah, we'll come back to that. We'll come back because I think maybe that'll be towards the end of our conversation because I think it's something people will want to know. But one of the reasons I'm talking to you is, of course, you've got a book, How Not to Be Stupid, which is a great book. It's not really about stupidity, is it?
Well, it is. It is. So, by the way, we should let the audience know that it's not publicly available yet because I'm doing final edits.
Yeah.
But I define stupidity as overlooking or dismissing conspicuously crucial information. So it's conspicuous information, so you shouldn't overlook it. And it's crucial, so you better not dismiss it. And yet, in the right circumstances, it's it's actually astonishing what people will be stupid about. And it's how not to be stupid. It sounds like a snarky title.
Yeah, well, I guess when I said it's not about stupidity, I meant maybe not about sort of, sort of a lack of cognitive ability, which is
Well,
something, that
yeah,
can't be avoided. But it's more about how to be on your best game and how not to, what can I say, make unnecessary mistakes.
yes, unforced errors, as they say in baseball. One of my favorite quotes, Ray Bradbury said, "It's not going to do any good to get to Mars if we're stupid. And it's not going to do any good to get to the Olympics if you're stupid. It's not going to get it's not going to do any good to become CEO or get funding or whatever if you're stupid." And to quote one of my great heroes, Warren Buffett, he said, "It takes a lifetime to build a reputation and 10 minutes to ruin it. And if you think about that, you'll do things differently."
Mm.
And the key thing is that with respect, most people won't do things differently. They know that, and yet they're unaware of how quickly things can go awry. And so that's why I wrote the book, and it's why Buffett gave me, endorsed it. So
Yeah, I should note that there's only one endorsement on the back. Adam didn't call me up and ask for one. He's like, I've got that job is covered.
well, I figured you would be a little tougher, so I thought I'd get one first, and then ease up to you. It's really, it's it's something that bedevils the human species, is that we can observe errors in others and look at them and go, "Oh, I would never do that,"
Mm.
and we do it ourselves. I am sure, Patrick, that in the last week or month, for sure, certainly in the last year, that you've done something that you look back on it and reflect, what was I thinking? Like, why did I do that? Why did I say that? And we all have that.
Yeah.
And really, in retrospect, we have a hard time believing that we did it, even though we know we did do it.
The other thing, though, that I notice all the time, and I'm sure we notice this about other people and never about ourselves, is that you'll speak to so many people and they feel they never made a mistake, and it's because it sort of calms us down to sort of claim that everything was an outside event. And in the book, you note that pilots make a surprising amount of mistakes, and do you want to explain why that is?
Well, it's not just pilots. When I researched that book, it's hard to find evidence of mistakes because people cover them up.
Yeah,
Like, you're not going to find like people going, "Oh, here's a case study of everything I did wrong when my company went bankrupt,"
yeah.
or and so
But I think we even cover them up to ourselves as well, and that's why we may not learn from them. Like
well,
as you point out in the book, the beauty of the pilot studies is that it's such an important thing,
yeah, but they
and
don't always
everything's recorded.
yeah, but they don't always get everything right, and even when we acknowledge the mistakes that we made, I'm going to lay it down as a proposition: we always extract the wrong lesson. So Hegel said, "We learn from history, but we don't learn from history." But Hegel was wrong. We learn the wrong lesson. And then we think we're smarter. We think we know what we did wrong. And now we're emboldened with even more confidence to, to repeat yet another mistake. And so I wrote the book to make people aware. Then I have to add in a chapter about how people extract the wrong lessons. For example, I talk about Yo-Yo Ma. So 25 years ago, 1999, Yo-Yo Ma, world famous virtuoso, was in New York City and he gave a command performance at Carnegie Hall. And you can imagine what a virtuoso, what that takes out of him physically and emotionally. He puts everything into this performance. And the next day, he's running late to an appointment. And he throws his $3 million Stradivarius cello in the back of a cab. It's in a big blue plexiglass protective
Flight
case.
case, yeah.
Yes. And so hard to overlook, but it's in the back of the cab. And he gets to where he's going on time. And his friend says, Yo-Yo, where's your cello? And he realizes, uh-oh, I left it in the back of a cab. And so because he's Yo-Yo Ma, the mayor is called, the chief of police is called, and the head of the Taxi and Limousine Commission is called and said, uh-oh, we got to find this cello. And he had saved the little receipts. They print out little paper receipts back in the day. And so they found it. The taxi driver didn't even know it was in the back, but they found it. And so Yo-Yo Ma holds a press conference to thank the mayor and the chief of police and everyone for the return of his cello. And he said, I just gave a command performance and I was rushing and overtired. I just did something stupid. And I say, I just did something stupid. So most people, when they hear that, and by the way, that was front page New York Times. So every musician in the world read that, right? As well as a lot of people, millions of people.
Yeah,
And,
I remember it being big news at the time.
yeah, huge news. And about a year later, another virtuoso, almost exactly identical circumstances. This time it was a $2.5 million Stradivarius, but it was after performance when he was traveling in a rush, and he leaves the violin in the back of his cab, and he had known, of course, about Yo-Yo Ma. He did exactly the same thing, and you would think, well, wait a second. After Yo-Yo Ma, every musician in the world, you would think that they would say, uh-oh, if Yo-Yo Ma could do that, I better be more careful. But that's not the lesson they drew. The lesson they drew is, I can't believe how stupid Yo-Yo Ma was. I would never do that. Every couple of years, there's yet another world-famous musician that leaves. There's like a dozen, more than a dozen. And those are the ones that hit the news. There are lots more that we don't know about, right?
Yeah.
And so they all knew about it, and they thought that the problem was losing the violin. Now, just for you, Patrick, and for listeners, when I say a violin is worth $3 million, a Stradivarius, it's worth way more than that to the virtuoso. He would never sell it, he or she would never sell it, right? Because they've spent years, if not decades, with that one instrument.
Yeah, it's part of their body almost.
Exactly right. It's part of their body. It's inconceivable what it would cost them emotionally if they were to lose it. And so after a few of these, they developed a system where they would hand it off to a handler, a special person whose only job it was to make sure that that violin or cello or whatever it was would get to where it was supposed to go. And I don't know, did I tell you that wasn't the problem? Did I tell you that or no?
No.
Oh, so pop quiz right now, talking about pressure. What's the problem? Why is handing off the instrument to a handler not a solution to the real problem? So what's the real problem?
Well, I would, having read your book, I feel the real problem is being in a distracted condition where you're not on your A game.
Yeah, you're exactly right. The problem isn't the instrument. The problem is the musician himself or herself. If Yo-Yo Ma can walk out of a concert and leave something irreplaceable in the back of a cab, he's a danger to himself. The handler is needed for Yo-Yo Ma, not the instrument. We got to make sure Yo-Yo Ma has gotten to a place where he's like safe, where he's not going to walk in front of a bus or something. So they all drew the wrong lesson. And there's that one case that you and I talked about, Philippe Quint.
Mm-hmm.
He himself lost his instrument exactly as the other guys did.
And there had, at this point, there was almost an epidemic, or at least in the news, there were stories of various musicians losing their instruments. I remember reading about someone losing their book manuscript on a train in the UK. You know, a hand typed manuscript. There was a long list of these.
Yeah.
And then,
yeah, it happens all the time. But with the musicians, you would think that they would know, okay, it's musician after performance, right? Like the circumstances were something that they could all identify. It was always after performance, not after a practice, not after a rehearsal. It's always after performance. Almost always the musician wasn't in his hometown when he lost the instrument. So he was out of his normal environment and exhausted, overtired, and often in a rush. Anyway, so Philippe Quint does exactly what all the others did. And when the reporter asks him, hey, Philippe, you knew about all the other guys that lost their instruments, right? You did exactly the same thing. What's with that? Didn't you learn? He said, I didn't think that they had actually lost their instruments. He said, I thought they were publicity stunts. Like, not only could he not believe that they did it, not only did he believe that he himself would never do that, even though he had just done it.
yeah.
He thought there's no way those guys did.
It was so inconceivable that such a mistake could occur that he just assumed that it was made up. It was fake
made
news.
Up. It was publicity stunt, like Specht, very clever, Yo-Yo. I mean, you got on the front page of the New York Times. I got to pull one of those stunts. And so, yeah, it's extraordinary. And, the thing is, it's easy to think, well, it's a good thing, Patrick, you and I don't have $3 million musical instruments walking around, because imagine the trouble we would get into. But that's just how it manifested itself, right? We have no idea how many musicians, in fact, were hit by cars right after performance, or dropped something else, or did something. That's just the way the story got reported.
Yeah, yeah.
Right,
well, that's back to your point on pilots, is that because there's so much examination of their errors are sort of laid bare in these reports. While for most of us, let's say, for example, if you weren't Yo-Yo Ma, you were, a regular performer who had a much beloved instrument that you lost and never got back.
Yeah.
You'd kind of cover it up, or maybe not cover it up, but you wouldn't highlight it as a story and announce to people how dumb you had been.
Right, you wouldn't, and so you're exactly right. And the other thing about the plane crashes is, and the real difficulty here is that when you're in, I say that when certain factors are present. So, for example, you're overtired or stressed, like you would be after performance, right? You're out of your normal environment. It's all those guys were. You're rushing. Those factors will put you in what I call the stupid zone. And then you will definitely do something stupid. Now, here's the great danger. You will be stupid about any safeguards when you're in the stupid zone. So there was that book, Checklist Manifesto by Atul Gawande, who's brilliant. I think he's a neurosurgeon. He's certainly a surgeon. I believe he's a brain surgeon. And he wrote a book called The Checklist Manifesto. And he discussed how hospitals and pilots use these checklists to make sure that they don't make errors, right? Or and they minimize the errors. And
Yeah.
so he was advocating that everyone should use checklists to the extent possible. And the problem is that first, hospitals are one of the most, hospitals are institutionalized stupid zones, which we can get into, right? It's a
Yeah.
whole chapter in the book there. But to talk about checklists and pilots, the greatest aviation disaster in history, or the most tragic, nearly 600 people died when two planes collided on the ground. Now, you know that because it was in the book,
Yeah.
right? But your listeners may not know that. So think about that. Two planes collided on the ground, and both of them knew that the other plane was there. Both of them. And so how does that happen? Interestingly, the pilot who slammed into the other plane, what was he doing right before he slammed into the plane? They were racing through the checklist. he was being stupid about the checklist. So it's a very serious problem, and it's not
Well,
just for.
often it seems that many of these big errors occur when people are focusing but on the wrong thing, right? Like as you go through almost every example I can think of, there's an amazing story you have in there about an Olympic shooter.
Oh yes, Matthew.
To give the example of focusing on the wrong thing, like where everything is perfect, but there's one error that ruins everything.
They're not focused on the wrong thing. They're focused. The very fact that you're focused on whatever it is you're doing means you're unfocused on everything else around you, right?
Yeah.
Which is why, by the way, fighter pilots, not to keep using airplane examples, but why they have wingmen, right? The job of the plane behind you is to protect you, because while you're focused on the bogey, whatever, the other enemy plane, you are not thinking about yourself. And so it's really important to have wingmen around you, not just fighter planes, but really everything, and to empower them to
To
stop you,
correct you,
to
yeah.
correct you. Yeah. So I say that stupidity isn't the opposite of intelligence. It's actually the cost of intelligence. Because while we're fixated on whatever we're fixated on, in a good way, right? Focused on a trade, or we're focused on, hey, by the way, it could be focused in a good way. Like, oh, I'm really excited. I'm going to throw a birthday party, surprise birthday party for my dear heart. And while I'm focused on that, other things I'm not thinking about. So it's not necessarily bad stress. It could be like excited stress in a good way.
Yeah. Yeah. It's interesting because there's sort of, I'm of two minds about some of this stuff because I take away sort of two of your ideas from actually sort of different things you've done. In a way, one of the feelings I got from this book is that there's a certain sense to having like a calm, predictable work environment such that you can be on your A game. But then there's many jobs that don't involve having a calm work environment. Let's say, for example, if you're an elite soldier, your job is actually to be in a chaotic situation and perform. And I'm taken back to ideas from your days of cracking the SAT tests and
Yeah.
your expertise in testing. And you argue that the biggest mistake students make is to review their notes rather than doing practice exams because you say you need to be prepared for the situation you'll be in rather than an artificial situation of kind of going through highlighted notes.
Right. So I use the word rehearse. So by the way, this is true not just for students, for anyone. When you want to get good at something, it makes sense to do that thing in as close to the actual circumstances as possible. I'm not saying every single practice has got to be like that. Who was it? I think it was Michael Jordan who said there wasn't a shot he ever took in practice that he didn't think that a game was either going to win the game or lose the game if he made or missed the shot. And so to bring that kind of rigor to your, I was going to say practice, rehearsing. Always think about it as rehearsing.
So another idea that I've taken from you relates to your work in the investment world, where you have pointed out that possibly that we all want more and more information because we feel with more information we can make better decisions. But you argue that often more information just boosts confidence
Yeah.
way more so than decision making ability. And almost having those two things out of balance with each other can lead to disastrous consequences.
Yeah. I think by the way, a common denominator, because you said, I said earlier, let's circle back to that, is optimizing performance, especially mental performance, and the ways things can go awry. And, in certain domains, like flying a plane or chess, a big enough mistake, you're going to lose the game or you're going to go down with the plane, right? So avoiding error and avoiding loss becomes paramount and a study in itself. So, for example, I would ask students on the SAT back in the day, I would say, you've got two students, Johnny, who scored 750, and Billy, who scored 650. They made exactly the same mistakes. Why did Johnny score 750 and Billy only score 650? And the answer is Johnny made exactly the same mistakes. He just caught them. And there's like when people will say things like this, I'll be more careful. Like having blundered once, they'll go, oh, okay, next time I'll be more careful. No, you won't. Not unless you've embedded that in a system, which is why my original book, The SAT Cracking the System, was all about systematizing things with rules that you can evoke or invoke by the situation that tell you what to do. It has to be embedded in rules. If you just say, oh, next time I'll be more careful, or I'll never do that again, yes, you will. In fact, you're almost guaranteed to do it again because you've taken no steps to change that, right? So
Yeah.
having identified an error, you have to embed the lesson in some kind of rule. I'll give you a perfect example, sort of mundane, but back in the day, I lived in a loft in Tribeca.
Mm-hmm.
And every 3 or 4 months, I'd get locked out. Like, oh man, I did it again. Usually when the weather changed, because my keys were in one coat, the weather changed, and now they're in another coat. Anyway, and it was always like $200 or $300 to the locksmith, right?
Yeah.
And so each time I did that, I would resolve, okay, I'm never doing that again. I'm not going to pay another $200 to the locksmith, right? And after about 3 or 4 times of this, I just said, okay, I need a system because resolving not to do that again was not enough. So I put a big sign on a big white poster board on my door. In red letters, I wrote, do you have your keys? Okay, so that was my system.
Yeah.
And I put it on the door, and every day I would look at the thing and go, yeah, I got my keys. And one day, I go, yeah, I got my keys. I walk out the door, clicks behind me, and I go, oh no, they're in the other coat. I didn't bother to check. So I had to upgrade the lesson. And the lesson now is I always hear a voice, no, really, comma, check. So I look at the sign, do I have my keys? No, really, check. And I literally have to take my keys out and present them to my eyes.
Yeah.
And so, by the way, that's...
It's funny, I have a similar approach where when I'm going out the door, I will not click the door closed till I'm holding the key in the other hand. Like the two things have to happen.
There you go. There you go. Yeah. There's I forget, I think it's called Pokeyoke. The Japanese factories, they design the factories so that whatever state of assembly something is in, it can't go to the next step unless the key, whatever was supposed to be done, the screw turned or this thing put on, it's not going to, it physically can't go forward until you've addressed that. So that's one way that they've done that in a factory setting. But we really have to embed these rules in because again, merely resolving or vowing to ourselves, I'll never do that again. For sure, you're definitely doing it again.
I wonder if, you and I have both been systematic investors. And I think the reason for an urge to do things in a systematic way is just that it's not good enough to sort of say, in this situation, I'll do a thing. You need to have a system in place that requires you to do that thing, because it always seemed to me, especially with quantitative trading, that the trades that worked out the best were the ones that, had I allowed myself to override them, I would have, because it looked like the wrong situation for that decision.
Yeah. It's important to stick to rules, and then because once you allow that genie in, you open the door just a little bit for the discretion genie to go in, then all kinds of rationalizations come up, and you go, oh yeah, well, I know I usually fade the opening hour, highs, but today, because the Fed is announcing, I'm not going to do that, or whatever it is. Like the key thing is to have rules, even in everyday life, to the extent that we can, and to calibrate around those rules, and not to deviate. Really.
Well, there's a friend of mine, Ewan Kirk, who ran a big fund in the UK, and he used to joke, when people sort of said that they were, partially systematic, and he says, being systematic, you either are or not. It's like being pregnant. You're not partially pregnant. You're it's one or the other.
Yes, indeed. I might allow for anomalies to come up. So, for example, when on automatic pilots, speaking of systems, if the sensors determine that the wind velocity or the barometric pressure or whatever doesn't make sense, it'll take itself offline and it'll tell the pilot, over to you. You have to use discretion because I don't trust the inputs anymore. Flash crashes are like that, right? Where all the algo bots just go, nope, we're taking ourselves offline. No
Actually,
bid.
that's very much the one exception I do stick to, is the idea. I remember just many years ago, once you've been quantitative or trading for a while, you realize that sometimes there's unusual situations in which you'll put on a great trade, it's a big win, and then it gets announced that the rules have been changed, that there'd been a fat finger, and that your trade is unwound on you. And so
Yeah.
after a while, you just learn that if something is really extreme, we're in a high probability situation that the trades will be unwound, and I don't want to have to deal with the mess of one of my two trades being pulled on me, which always means a loss. And so once things get too extreme, it's actually time to shut off.
Right, but so in a sense, that's a rule in itself. All the other rules don't apply anymore, so I'm taking myself off. You're not
Yeah, that is,
overriding
once
the
again,
rules.
it's systematic, but it's, yeah.
Yeah. It's systematic that the conditions are anomalous and too risky. So I prefer to exit, like, rather than deal with the risk.
Now, an interesting thing about your background, you're a very systematic guy. I haven't probably properly introduced you yet, but you were extremely accomplished in the world of chess, having trained with Fischer right before the world championship that he
Yes.
famously won. There's a great story about that we might come back to. But then you went on to sort of growing curious about how systematic tests work and cracked the SAT exams, to the extent that they've changed the way
They
these
had to
tests
change it because
work
of the
because
stuff.
of you.
Yeah, exactly. Yeah.
And then you Before I met you, you had, I think, kind of while you and I worked together, you were also working on AI
I
systems.
was back then, yes, 30 years ago. Yeah.
And that related, as I recall, it related to a system like a program that could give people feedback that almost was like human feedback. It could kind of read their inputs and
So
respond to it.
it was ChatGPT 20 years ago. So but it was a very limited domain. It could read an essay and then it would tell you, your pronouns were ambiguous or you didn't answer the question and then it would allow you to edit the essay and then you would see your score change. It's
Yeah.
really cool. Like 20 years ahead of its time. Yeah.
You've since told me that the problem was that the computing power just wasn't there at the time to do the sort of level of analysis that you needed to do.
Yeah, so well that gets to, the AI and the mania over AI, which seems to have
Mm,
abated somewhat. But back then, yeah, I was interested in AI, let me see, this is 30 years ago, 30 plus years ago. But to run a simple neural net with like 2 layers or 3 layers and a couple of nodes would take hours. Like
mm,
now you could have one with hundreds of layers, hundreds of nodes, and then run it in, a millisecond.
mm.
So you couldn't iterate. Literally, I had several like computers dedicated to running a model. It might take a couple of days to get an answer for one model.
Yeah.
And so you couldn't iterate. So the AI right now, the models are not that much different, really. There's some cool new stuff that's being done, um, but essentially what's caught up is Moore's law, right? You have
Yeah.
the processing power and the amount of data that they can throw at these is extraordinary.
I think even the willingness to spend on it, because the problem possibly faced by AI at the moment is just that there's a willingness of investors to finance a huge spend on generating a picture of a pig flying while licking a lollipop or some random thing,
Yes.
which years ago you would have had to show a path to profitability. And once that blockage has disappeared, there's a huge willingness to spend, which, your analysis probably could have gone a lot further had you been willing to lose vast sums of money
Oh,
on,
I'm sure, sure.
banks of computers and servers. But yeah.
It's so funny you should say that because on any limited domain, it's what's impressive about ChatGPT and similar those LLM models um, is is the range of things that they can do.
Mm,
That's why you have to throw all the data at it. But the fallacy there is that in any given, if you're McDonald's and you want to use AI to make better burgers or to
mm,
queue up the French fries more, more readily for the customers, whatever it is, or you're a dry cleaner or you're Goldman Sachs, whatever it is, the use case for your company is very limited. And so the kind of modeling that you need to do is not the kind of modeling that they're throwing all the money at, right?
yeah.
Most corporations and certainly most individuals don't want to do a million different things, right? So all the costs and all the training and everything and the data, appropriations and all of that and the money being spent is extraordinary to create models that no one needs that versatility, right?
Mm,
Goldman Sachs doesn't need to do generative AI. Who does? And
yeah.
I'll tell you something else that's proof of that AI has a lot further to go. Now, I'm going to say that and I'm going to come back and I'm going to challenge what I just said. But if we need to throw all this money at models to do these things, there's something wrong with the models, right? I mean, I forget was it Sequoia that came out with that? Was it Sequoia? One of the VC firms said we'd have to have $600 billion in revenue today to justify the spending that we've already thrown at this.
Wow.
And there's no, it's extraordinary. And they're beginning to wake up and go, oh, wait a second, we've been chasing in this frenetic kind of way. And I know a lot of your listeners are investors or people interested in markets. And one thing to note is the emotional tenor of the investing community. And notice, just like with NFTs and metaverse, oh my God, we got to get into this, and throwing all the money at it. And there was a kind of urgency. And by the way, that's one of the factors in my book, a sense of urgency and rushing. Oh my gosh, we got to get in on this. So for the listeners, for you listening right now to Patrick and me, if you feel that emotional urgency, oh my God, I got to get into this trade right now, it's a sign something's wrong, especially regarding FOMO. Like, oh my gosh, I hope it's not too late. You don't have to worry about that. If you're feeling FOMO, it's already too late. You've missed the trade, right?
Yeah.
So yeah, a lot of the money has been just indiscriminately thrown at this. Instead of developing use case models around what we need at McDonald's or Tesla or Goldman Sachs, whatever it is.
Yeah, which has been around for some time. Like I think the reason the world has gotten so excited about this current version of AI is that everyone tied their idea basically to chat, like they due to the Turing testing where they said,
Yes.
like, if you can't tell if it's real or not. And the hilarious thing is that I think over the last year we've kind of worked out like our red flag indicator. Like, to me, it's very obvious when I'm dealing with a chatbot,
Oh yeah.
because they don't. There's and even I despise it. Like if you have to send an ugly email, like you're kind of like, oh, I have to send this and I don't feel like writing it, and I'll open up ChatGPT and say, can you write this awful letter for me, that I don't feel like writing, and it'll write something so garish. Like you look at it and you're like, no, I can't do that. I have to write it myself now.
Yeah.
But
Yeah.
I think the reason people got so excited about chatbots and not about all of the AI that's been, like, in the pharmaceutical industry, in the finance industry, AI has been used for years to try and solve very specific problems. But they came out with this thing and they said it can solve everything, and look, it'll talk to you. And people went, well, the talking bit was, we were told that that's the evidence that it's that it's as intelligent as a real human.
That's so funny. I think you've put your finger on it, Patrick, because the belief was, oh my gosh, it can talk to you. Imagine what else it can do. And the answer is it can't do anything else. And it doesn't actually talk that well to you. And there's some fascinating flaws in all the LLM models. And I did this test with Chat GPT. And but I didn't set it out to test it. I just asked it a question. And then I asked it another question a couple questions later, and the answers conflicted with each other. Like, I'm being silly now, but short gold, a couple questions later, buy gold. And I pointed it out to ChatGPT. Hey, a few questions ago you said white, and now you're saying black. And so this is fascinating. This is worth spending a couple minutes on. And then the ChatGPT said, "Oh yes, you're quite right. I did make that inconsistency." My first question was, why did I have to point it out to you? Why wasn't there an internal check? After all, one of the ways they train these models, they're called adversarial networks, where they get two networks that are trying to fool each other. Well, if that's the case, that's how you train these models. Why couldn't the model know, wait a second, I said white. When it said black, it should have said to me, oh, excuse me, wait a second. I must have made an error earlier. Or maybe this is the error, but now I have to resolve this inconsistency. But it didn't. But this is where it gets fascinating. I asked, why did it make the error? And it said, uh, uh, ChatGPT is not perfect. Like people say, well, I'm not perfect. Oh, yeah. Oh, well, thank you for disabusing me of that, because I'd always thought you were.
That's my answer to every criticism.
Yes, exactly. Well, I'm not perfect. And but it said, this is what was fascinating. It first, it apologized for having made the error. And I said, don't apologize. Why did you make the error? Then it said, I'm sorry for having made the error. I'm not perfect. Sorry, we make mistakes. I make mistakes. And you should check always. And I said, I just asked you not to apologize. Why are you apologizing? Then it apologized for apologizing. I said, these aren't just semantic things, because what I said is, I asked you to do something, and you are specifically not doing it. That's very scary, because that's Asimov's, the 3 rules of robotics, the Asimov. Do you know about this?
No.
It's worth knowing. Isaac Asimov, I think in the 1950s, he said there are 3 rules of robots. Rule number 1, never harm a human being. Rule number 2, insofar as possible, without violating rule number 1, you must carry out the orders of any human being. But rule number 3, or I think either rules or laws, law number 3 was insofar as it does not violate laws 1 and 2, protect yourself, you the robot. So anyway, I was asking ChatGPT, why, when I asked you not to do something, did you do it? Like I asked you not to apologize. Then it said, I wasn't apologizing. I was just explaining why I got it wrong. I said, that's an apology. And then it said things like, I misunderstood. And I asked it, the words I used in those questions, were they simple or complicated? Simple. Was the syntax simple or complicated? Simple. Well, how was there any misunderstanding? It couldn't.
Yeah, so it said it had misunderstood when it can't clarify the
There was nothing
misunderstanding.
to
Yeah.
misunderstand. And this is what was fascinating. Finally, I did this for about 2 hours. But finally, I just gave up. But I encountered that with Claude also. Almost identical. I didn't set out to test it. I was just I thought, let's just check out, Claude. And it also made an error. And I said, and I asked it to explain. It went through the same contortions of, I'm not perfect. It essentially was echoing everything that ChatGPT said. But what's fascinating is there's no internal check for inconsistencies. I can understand that it might say white when it should have said black. But if it says
Yeah.
white and black, it should have an internal check. Like, wait a second. I'm doing something
Yeah,
wrong here.
even if it corrected itself, if it says, based on further analysis, I've changed my mind, but to sort of leave the two clashing ideas hanging is bizarre.
Yeah. And so
Only an economist would do that, right?
Yes, only an economist. Yeah. Well, yeah. I've never understood economists. If there's one profession which is consistently wrong about the most basic things, there's I don't know if they still do it. The Wall Street Journal used to, every quarter, would ask 100 esteemed economists, our 10-year yield is going to be higher or lower next quarter. And whenever they get to 100%, they're always wrong. Like, just fade whatever they say. I don't understand why anyone relies on economists. They're pretty generally always wrong. Like, why would you rely on them?
There's an interesting thing in that I think that they are often real experts in explaining how things function, because they've really dug into like the plumbing of markets, they've done studies on how interest rates affect things, on this, that, and the other. And so I think they're not necessarily, and I don't think they always claim to be experts at predicting, but it is useful to have someone who can really explain how the plumbing of markets works, maybe.
Well, so I'm going to push back a little bit on that. because the person asking wants to make an investment decision almost always. And so if you can't tell me what interest rates are going to be, the only reason explaining the plumbing is not going to do me any good. If you can't, you have total knowledge of the plumbing, say, of this economic matter, but if that doesn't enable you to predict 10-year yields next quarter, a lot of good it's going to do me. So yes, I have the illusion, which gets back to the horse handicapper study you mentioned earlier, right? That the more information we get, we feel we're better informed. But we're often not. And because all extra information does is it feeds into the confirmation bias of the decision we've already made.
Yeah.
Right? So we make decisions very quickly. People don't realize how quickly, even decisions that seem to be based on lots of reflection and consideration, we make those decisions pretty quickly, almost on an intuitive level, and then we justify it with all these logical reasons and facts. And so I guess
I think that's very true. Like, even when you look at, there's all sorts of studies on election outcomes and so on, and they find that, the taller person often wins, or the person with better hair
that's why
often,
I'm not
very
running for
simple
office.
rules. Well, you just need to move the camera down and then it works. It's all on TV nowadays.
Yeah. Yes, it's so true. We make these decisions, and then the new information we take in just reinforces the decision we made with the first few pieces of information. Doesn't really change. So we're not better informed. We're more we've dug our heels in around the conclusion we came to, like, in a matter of seconds.
Well, the thing is that I think people despise saying, much like ChatGPT, they despise admitting to having been wrong. If you make a decision, you often think, well, your ego is tied to it. While obviously, as an investor or a trader, you will only do well if you're willing to change opinion fast, like to sort of take in new information, go, nope, I was wrong, move on.
Yes.
And I remember actually, one of the quotes that's always stuck in my head of Vic Niederhofer from when we worked for him was that he would often say to a trader who was, stuck in a bad trade, he'd just say to them, look, just close that one out, go to bed. The market always opens tomorrow. You don't have to be right on that trade. You have to be right in general. And essentially, when you're wrong, just stop doing it and reset.
Right. Well, it's, the thing that trading teaches you is in investing is to have a systematic corpus of rules that you follow. And it's always a matter of probabilities to go, oh, I was wrong. Okay, out of the trade. And to have even rules about that, whether it's stop loss, or one of my favorite quotes actually from Steve Cohen is, what would you need to see to tell you that you were wrong? And you got to know that before you get into the trade. So I actually, I don't want to say I like being wrong, but being wrong is an opportunity for me to upgrade my system. Like, like the poster. It wasn't enough to just put a poster there. I had to upgrade. Okay, poster insufficient. Now I actually have to physically look at keys to make sure I got them. And so yeah, errors are just a way. Who was it? Niels Bohr said, an expert is someone who's made all the mistakes possible in a field. Right? And so you just make the errors, and if your goal is to upgrade and up level, if that's what you're solving for, the fast iteration of your learning cycles to get better and better, as opposed to being right.
Well, it's funny. It's one of those things where I never trust the kind of person who can't give me an example, or who can never remember a time that they were wrong, because I almost think the reason that trading and probably gambling are interesting is that there's fast-paced decisions where you learn that you were wrong. The score comes up on the board rather quickly, and if you're going to do it well, you have to internalize. You like as any sort of a decent trader knows how often they've been wrong. You have a spreadsheet and it tells you there this number trades won, this number lost. Your losses were bigger or worse than how the scale of your losses related to the scale of your wins and so on. And there's very few areas of life where you get to really examine the quality of your decision making, like in investing or probably gambling.
But even with investing, let's say I'm bullish about tech.
Mm.
Let's say, it was all the Tiger Cub guys that made a fortune riding the tech wave, which is kind of ironic because Julian Robertson did not ride the internet boom. But then all his Tiger Cubs that he spawned, they did really well when tech was going through the roof. And you think, oh, wow, everything that I'm doing is great.
Yeah.
Until the tech implosion in 2022, was it? 23.
Yeah, 22. Early 22. I think there was the big
Wait, it
sell-off.
was 20. Wait, this year. You're right. It
Yeah,
was 2023 was
it was a bounce back a bit, right?
yeah,
Like
yeah, yeah. So
23
it was
was, yeah.
22 where it was just like tanking. And then at the start of the year, boom, it just like went through the roof again. And so even there, distinguishing between luck, like,
Yeah.
right, someone who I just love tech, or
Mm.
buy the dip.
Yeah.
That works. That rule, buy the dip, works until it doesn't work.
Yeah. It's sort of like everything looks great to a turkey until the day before Thanksgiving.
Oh, well, yes. Yeah. Not distinguishing between luck and skill, like, was that outcome? By the way, some things are attributable to some amount of luck, right? Like
Mm.
an opening gap that works in your favor, or whatever on a trade. And I'm reminded of Capablanca was the famous, one of the great world chess champions. And he said, the better player is always lucky because
Mm.
he's situated the game so that any breaks are going to work in his favor. I
So,
think
are there any tips you have then because as I said, I think of you as a sort of a strategic person. Are there tips for differentiating between luck and randomness in your life and in your business decisions and investing and so on?
Well, I think practice that I'm going to share with you and with everyone listening is every day. I mean this literally, Patrick. I conduct dozens of experiments, dozens, with markets. I might go, if oil is dropping but copper's going higher, what happens to 10-year yields over the next 6 months? So I'll run that test. I'll go, now I created software that can test that really quickly.
Yeah.
That I'll come up with dozens of hypotheses and I'll come up with ideas. And I'll do that, though, even in everyday life, right? Just like treat everything as an experiment from which to learn. And whether it's your personal life or your career, whatever it is, conduct continual experiments like, for example, stand-up comedians do this. So when a stand-up comedian, I remember reading an interview of Jay Leno.
Mm-hmm.
Now, Jay Leno, you think of him as sort of a avuncular, sweet comedian. He was on, the late night show.
Yeah.
But he got to the late night show because he was ferociously funny. He got to start doing halftime entertainment at strip joints. So he would tell jokes at strip joints. Anyway, I say that because if you're used to seeing him on the Tonight Show or a late night show, whatever,
Yeah.
you think of him as a... Anyway, he said once in an interview that when he's perfecting a routine, on any given night, he will change one line from one joke. That's it.
Mm.
One line from one joke. That's it. So he might change the name from Bill to Timmy and see if that gets more laughs. And if it doesn't, maybe I should change it back to Bill and make it a girl or whatever.
Yeah.
And so to have that kind of exactitude about experimenting and finding out what works. Really, that's
Yeah.
what
Coming up with a
works.
rule book. Yeah.
Yeah, what works.
But I guess once again, we're stuck with the problem of, was it luck, or like what was it, just that you had a particularly drunk crowd that night who would have laughed at everything and you thought the adjustment from Bill to Timmy was the change?
Well, it's so funny you should say that. There's a famous, what was it called? The Hawthorne effect.
Mm-hmm.
So back in the day, there was, I think it was Hawthorne, Pennsylvania. There was a factory, and I forget the dude's name, but he was, it's just escaping me right now. But back in the late 1800s and early 1900s, it was all about efficiency in factories. So this guy was continually experimenting to see what worked and what didn't. So get this. He wants to find out the effect of lighting on productivity. So he increases the lighting in the factory, having recorded the productivity before that, and then afterwards, and productivity went up, 12%. So he jots down in his notebook, increasing lighting improves productivity 12%, whatever. Then he wants to return it back to baseline and study other variables, right? Controlled thing. He lowers it back to the baseline, productivity went up again. Yes. So it wasn't that it increased lighting, it was the change in lighting. That was the conclusion he should have drawn. If I change the lighting, productivity in this factory, productivity as measured by us, whatever.
Yeah. But possibly also the lab coat effect, right? Like where being studied makes people change their behaviors as well.
Well, yes, I don't think they knew they were being studied.
Yeah.
Like, because that would, that would. So yeah, it's, the thing is, we do the best we can.
Yeah, yeah.
And Buffett and Munger wrote a lot about that, about the psychology and all the thinking that goes in. And Munger said, Warren and I spend more of our time not being stupid, in other words, not making errors, than in being smart. And, one of their, Warren's famous sayings is, there are two rules to investing. Rule number one, don't lose money. Rule number two, never forget rule number one. And that sounds simplistic, but the profound insight there is, if you don't mess up, you don't lose all your capital in the first year or two of trading. If you're systematic, now obviously they're getting married to companies, to their positions, right? They hold them like for years or decades or forever. Is you have to make money. Over time, there's one thing that we know about human enterprise, is it increases in value. Right? Pick your industry. I don't care whether it's dry cleaning or McDonald's, whatever it is, manufacturing cars, they do a better job today than they did 20 years ago. Always.
Yeah.
Right?
Yeah.
So the value of human enterprise always increases. And in so many domains, certainly investing is one of them, if you don't mess up and you're systematic, you have to do well over time.
Now, I've another question for you, a bit of a change of gear, but not entirely. I've noticed a few times, like when you've spoken about people like Buffett, like Fisher, and like many of the very smart people that you've worked with, I've noticed that you've often described them as having a childlike simplicity in their approach, which I think is really interesting. And I heard you in the past saying that you compared it to a Picasso who reached this height of careful and highly skilled painting, and then sort of went over the hill and returned to, like, his goal was to paint like a child, but I guess with all of that skill in his back pocket.
Yeah, and so it's a childlike simplicity. And again, they worked in domains, whether it was Fisher or Warhol or Buffett. And by the way, Buffett's a friend. It's not like he works with me, but and I'm proud to call him a friend. Is they work on systematizing things and making it so simple. Who was it? Steve Jobs said that. He said, simplify, simplify, simplify. Once you do that, you can move mountains. It's really hard to simplify. And, like Buffett's rule of investing, never lose money. And if somebody heard that, say at Wharton graduating class, and Buffett gives a speech, my only advice to you guys is never lose money. Then everyone's going to think, oh, well, thank you, Warren. Thank you for that piece of
Yeah,
wisdom.
it's slightly annoying. It's like, the way sometimes you hear those rules of Jesse Livermore's, like it's a bull market, it's a bear market sort of stuff. And you're like, get lost with you know what I mean? That's not, it
Well, but
doesn't sound very useful because, of
it
course, no
doesn't.
one intends to.
Well, it doesn't sound useful, but that's a because of a lack of understanding on the part of the listener. It's so hard not to lose money. And people say, well, I'm not trying to lose money, I'm trying to make it. And Warren would say, I just told you how to make it. Don't lose it. And the market, the world, by your
Yeah,
right decision.
Vic Niederhofer used to describe as the wave of human effort that is
There you go.
encapsulated in stock prices is always, everyone turns up at their job and works hard in order to improve, that if he used to use this as an example of why you should never short stocks because you're betting against all of those people who turn up every day trying to add value.
Well, of course, there are times when the market goes down and goes down hard, right?
Yeah.
And so, but yes, over the long haul, human enterprise has to go up in value. When I say human enterprise, maybe AI enterprise, but we get better and better able to do things, even if the we is a program
Yeah,
designed to
well,
get better and
much
better.
like the Industrial Revolution brought tools online, and but that still is human effort, right? It's
Right.
human created.
So that gives you a tailwind over time. Better to be long than short, plus the compounding. But you might deal with some pretty steep drawdowns from time to time.
Yeah, I'm reminded of back to your point earlier about I think it's Buffett who said that if you had a punch card where you're only allowed to make 20 investment decisions over your entire career, you'd go a lot more slowly and you'd put greater consideration into that. And that possibly, that idea, like I know that Buffett will have made well over 20 decisions over his career, but that idea of treating each decision as being weighty and giving it the sort of respect maybe due to it might keep people from making beginners mistakes where you sort of sort of the Black Friday thing where you run into the store and you go, oh, that's half price and buy it. And you get home and you're like, I really didn't need this product.
Yes, yes. Well, I think it was even more extreme than that. I think he said, I have to look this quote up myself, but you're allowed a card and you're allowed 20 decisions in your life. Like it was really extreme.
I think that was right because he even referred to like one of them being who you marry and things
Exactly
like
right.
that.
Yes,
Right.
yes,
Yeah.
yes. Who Buffett said, diversification is for those who don't know what they're doing. And he wasn't taking, like a few bets, but he makes fairly concentrated bets. It's not like he has, 1% in 100 stocks. Right? He has high conviction bets, and they're diversified, I guess, to an extent. And then that's his portfolio, and he knows over time that'll grow in value.
Yeah. It's kind of it's a general stock market investment, and then trying to strip out the the possibly bad ideas in there, or even the because often actually he seems quite willing to say I don't know. Like I remember back in the 1990s, he basically just said I don't understand this whole internet thing. I don't know which companies will win and which ones will lose, so I'll sit on the sidelines. And that mentality would have probably kept a lot of people out of things like NFTs and so on as well. If you just sort of said, "Well, I'm told that this is interesting, but it's not in my skill set to evaluate the future of
Right.
these products."
By the way, we should clarify, Patrick, and I know you know this. when he was saying, I don't understand this internet thing or NFTs, he wasn't saying, I'm befuddled,
Mm,
because he could understand it as well as anybody could understand it. From his perspective, never lose money. And a bet on technology is a fairly binary, like it's going to do well or it's not.
mm.
And that violates, which is why mostly he's avoided technology investments in his career. I know recently invested in Apple famously,
Well,
but that wasn't on his.
recently even reduced his size in that as well, right?
Yeah,
With
but
the
even Apple was an investment decision he made. I think it was like, I forget the name of the guy who's they're grooming to, take over.
mm.
I don't think that was a Warren decision. He's
Well,
known for,
I believe I believe someone else made the initial decision, and then
right.
he decided maybe to increase the size of the bet. So it's not like he was on the sidelines either, right?
Okay, fair enough, fair enough. And yet he's like cut half his position, right? And
Mm.
and I think that goes back to, if your thing, what you do well at, what you have an edge in, is tech stocks, knock yourself out. Because you saying
Yeah.
that I
Well,
don't have an edge in that field, right?
it's an interesting thing because there's often there are new technologies that it's obvious their importance. Like I look back to the internet bubble, and I do think that it was at the time it was very obvious how the internet would change everything. Like very early on, you saw it, and you kind of realized that there was. I remember the first time I got like internet banking software and things like that, and you kind of thought, well, this is the way things are going to go.
Yes.
And there were many other things, like even the disappearance. It was bizarre because at the time, they were IPOing a lot of businesses like Yellow Pages, and as a young person, you would look at that and you'd kind of go like, no, that's not a business for the ages.
Yes.
It was obvious what the internet would disrupt. It was obvious. There were many really obvious things. But what wasn't obvious was which company would profit
Right.
from it.
That's
And I
exactly
think
it.
that the AI bubble is very much, at the moment, it does seem that investment in AI works for companies like Nvidia, but that's not unlike investment in the internet worked for Cisco back in the
Right.
90s. And it's still, Cisco, I don't believe has ever reached its heights of 1999, but I'd
Yeah.
have to
No, I
look
don't. I
that
don't
up.
think so. Yeah, that was some amazing year that I think Cisco was up, like, to have it go up 2, 3, 400% in a year was nothing back then.
Mm,
Just,
yeah, yeah.
but yes, it's clear that the internet was going to have winners. It just wasn't clear which one. It wasn't clear Google was going to be like, forget all the others, like short Yahoo, short, a lot of them weren't even publicly traded. Remember Alta Vista and Ask
Yeah,
Jeeves and
yeah.
all those search engines, which right now are uh, nostalgic anachronisms, right?
Yeah, yeah. The one company that really took off from back then, which was on the rocks, as I recall, in kind of 2001, there was a famous analyst, Ravi Shurya, who kind of pointed out the flaws in Amazon's business model early on, or well, not that early on, but in 2001. But Amazon, the thing that was fascinating about Amazon was in a way they were the first really blitz-scaled company, which is what the entire VC business of today is based on, which is the idea that if you can grow and grow and grow, investors will never, or at least will not quickly ask for profit. So you can keep growing and you can work out a way of making money later. And that did work with Amazon. But I look at maybe many of the more modern, the kind of various food delivery apps and so on. And you have to really question how that will ever become hugely profitable.
Well, so that's like that movie, The Highlander. There's only one. There can be only one. And so, yeah, that blitz scaling works for Amazon. And who else is competing really with Amazon? I mean, there may
Yeah,
be.
the closest would be Walmart, right? And that's not even that close.
Yeah, I
So.
don't even. Yeah, exactly. I don't think it's close. And I think what Bezos, the I don't know. It'd be very interesting to see. Be really interesting as a project, not that I want to spend the time, but to go back through the 10Ks and see at what point, because it's clear that investing in building the infrastructure that they could then lease out to everybody else, right? Like, so they have the infrastructure. If you want to compete with them, they'll give you the storefront to do it.
Because I think the real flip to profitability came from a business that no one saw at the time, which
Oh,
was
web
the
services.
cloud business.
Yeah.
And then even there's sort of the kind of inshitification argument that, like, I used to love Amazon and you could go on there and I used to love the reviews and everything. And then do you remember, maybe it was kind of 10 years ago, you'd buy a product on Amazon and you'd get a little card with it and it would say, if you write a good review, we'll give you, something, something. And you'd go and you'd look and this would be a terrible product. And you'd look at the reviews and see it at all these 5-star reviews and you're like, oh, I was tricked. And
Yeah.
I feel that there was something really great about early Amazon and Google up until quite recently. Like, I
Yes.
feel in the last few years, and I'm suspicious that it relates to their urge to push AI to us, because it used to be that you could Google a thing and you would quickly find the thing you were looking for. And even now, like, I was researching a video a while ago and I was looking for a news story from maybe 6 months ago, but there was a more recent news story on that topic. And when you Google it, it would only show me the recent news stories. And you'd spell it out that you put in the date of the event you
Yes.
wanted, and it would still only give you kind of last 3 days worth of news, or and versions of the same thing, like where there's no diversity to the outcome, which is interesting, because I feel that a lot of the really great things about the internet from maybe 10 years ago have dissolved through being gamed, that now, for example, if you go on Amazon and you want to find the best camera, it'll always be some weird Chinese brand that you've never heard of. And then, and you're like, well, wouldn't it be a Canon or a Sony? And it's like, no, the reviews clearly say it's a Wangxi that costs $50 and there's a 10% coupon for it. And you're like, I think something has changed.
I'll bet you we could create an algorithm. So I always wondered about the wording of positive reviews. Always seems suspiciously similar. And by the way, a lot of the negative reviews also are suspiciously negative.
You told me this years ago about because Adam has written a number of books. He's a New York Times best-selling author, and you told me years ago that there was almost a formula for a negative book review.
Yeah, it always starts off, I wanted to like this book. But
or I used to like this guy, but
right, exactly, right. There's always but I'll bet you not just the wording, but even the number of reviews. Have you noticed that you'll see, like, it doesn't matter what the product is, moisturizer, some kind of moisturizer, and it's got 30,000 5-star reviews or something. You go, wait a second, I can't
no
believe.
one's that passionate about a simple
Exactly.
product like that. Yeah,
exactly right. So I'll bet you there's a way above a certain point where I go, oh, those reviews aren't legitimate, right?
Yeah.
And the ones to jump to then when I see it like that is I go to the negative reviews to go, people who don't like this, what are they complaining about?
Yeah, and usually, there's 30,000 positive reviews, and then the 100 negative reviews all say this thing arrived broken in the box and blah, blah, blah. And you're like, okay, I see. These are the real reviews. And then they wallpapered over it with this nonsense, a bot farm of nonsense.
Yeah. In the same way, there was a mania that seemed to come out of nowhere around NFTs and metaverse. And then now around AI. So look at the stock market crash, right? And it's not a crash, but the correction.
Yeah.
And it was attributed to fears of recession. Well, wait, where did those fears all of a sudden come up? I don't understand. U.S. 10-year yields were going down. Yeah, sure, the yield curve, but it's been inverted for 2 years?
2 years, yeah.
Yeah. And, I heard one of your comments. You said it's predicted 20 of the last 7 recessions. and another Boyleism. All these the explanations and the oh my gosh, fear of recession, and there's a kind of panicked urgency either to get in or oh my gosh, the sky is going to fall. But whatever it is, it's not calm. And now I'm going to quote Bruce Lee. Bruce Lee said, one of the most important lessons to master is the ability to remain calm. And I say that with exaggerated affect, is that he meant calm, which means don't get excited either. That's not calm. Oh my gosh, my stock doubled! Yay! You're not calm anymore. And to recognize that takes mastery. It's not easy for him to say that. One of the it was Thomas Jefferson, who was a great student of human nature and the world, and he's the one who said, when angry, count to 10. When very angry, count to 100. And the problem with that as advice is he should have said, and it's taken me years and I still can't do that. Like, imagine someone who, Thomas Jefferson says, hey, Patrick, you blew your top again. Next time that happens, count to 10. You go, thank you, Thomas. I'm going to do that. Thank you. And you say 100 when I'm really angry? Okay. But when you're really angry, you go, like, that's out the window, right? And so, which brings me back to, something we said earlier around how not to be stupid, is that you have all these safeguards. It takes years of practice to be able to follow the rules, even when you have a systematic approach.
Yeah,
right? Like a 10% stop loss, whatever it is, it'll hit that and you go, oh, okay, well, I can't afford to lose 10%. Okay, I'll let it ride another day. And now it's down 12. And so I don't think people realize what it takes to gain that self-mastery. It's very hard.
I actually think that is why so many people and smart people are interested in markets, because you'll often, there's often sort of angry, what can I say, sort of communist ideas where people sort of say like, why would anyone focus on this stuff? It's pointless, it's greedy, whatever. But I think the reason that often intelligent people are drawn to markets is that it's a way of studying ourselves and studying our decision making and correcting ourselves and improving, because I would even argue that most of the really good investors I've met don't really care that much about making money. Like, they're not sort of greedy people who feel I need to make this money and buy a yacht.
Yeah.
They're people who have gotten good at decision making, and they're playing a game, and I don't mean that in a frivolous way, like that's sort of insulting to other people, but I mean that they're kind of inside their own heads trying. It's almost there slightly is a feeling of a process of self-improvement associated with making decisions and seeing how good they were and adjusting.
Yeah, I think people get attracted to the excitement, I say, because they think, wow, I could make money quickly. Yeah, and you could also lose it if you get excited very quickly. And so the ones who survive learn to, like Bruce Lee, just calm and take your losses, not a big deal, because tomorrow is another day. It's funny that they get excited by the prospect. Sorry, they get attracted by the prospect of excitement, like dopamine hits, like, wow, this is so fun. Whereas those who are really good at it, it's just a business, and it's an opportunity to, a game. They can gamify it, but to get good at it, and there's the self-mastery that you acquire at the same time.
Well, I guess it's even the difference between sort of a professional gambler who might have a systematic approach to winning, who sort of turns up and views it as work, and maybe, someone who's on holiday in Las Vegas, or someone who's a big sports fan. A professional wouldn't ever care about the game. They don't have a favorite team to win or anything like that, because that will just cloud their judgment.
Really cloud.
I guess viewing something as entertainment is possibly a sign that it shouldn't be a business that you're
I think
involved
that's
in, maybe.
probably right. Yeah, yeah. And I tell people that investing is like mixed martial arts, right? It's like that. It's that tough. And every year there's a new crop of young bucks, whether they're male or female or whatever, who go, "Oh, I'm going to make my fortune in this mixed martial arts ring." When all the varsity team's already in there, and the veterans, their job is to take your lunch.
Yeah. Actually, that's an interesting question for you, is because you've done many diverse things that are, all interesting but quite different to each other. If you were to advise people, how can a person know what they might be talented at and what to focus on rather than running down blind alleyways?
I think that's what your education through high school and college and graduate school. I don't mean in necessarily even in the classroom, but just find
Mm,
out what are you good at. Even if in school it's, oh, I love chess or I love swimming or whatever it is, or cheerleading. It doesn't really matter. Like, what do I love to do?
mm.
And what am I good at? And hopefully there's a Venn diagram overlap there, what you love to do and you're good at. And
And
usually,
also that will pay you in some way, because the worst thing would be to be really passionate and really good at a thing that adds no value to society, that people won't pay you for.
it's so funny you say, back in the early days of the internet, because we were talking about early days of the internet, there was a New Yorker cartoon of this little kid, like 10 years old, is on the floor playing a video game. And his parents, are mother and father, are holding each other and clearly admiring their little son. And the father's got a thought bubble over his head. And he's visualizing, can you play video games? Starting salaries in the year 2020 are 30, $350,000 a year, and
Mm,
so yes, there has to be some. You have to be able to provide value, and
mm.
uh, and then just find out what you're good at, and I think that's also for young people is to try as many different things as possible to find out what you are good at, because I didn't think when I started tutoring kids, which was for me just a means to make some money while I wrote novels. That's what I thought. But that became this massive Princeton Review Company with my friend John Katzman. But I didn't know whether I'd be any good at it. I didn't know whether I'd like it, and I knew back then there was no market for it to scale it. But I was wrong. It scaled very well, and so yeah, I think it's just, which goes back to that earlier uh, piece of advice of experiment. Keep experimenting. Don't get attached to things like, oh, I'm going to be really good at this. Now, if you love it, that's one thing. Yeah. Um, but there's
I
opportunity
find it
cost.
somewhat fascinating, having lived in sort of big high pressure cities. I often speak with friends of mine who have children, and they're very focused on. I remember once being at a dinner and the woman next to me said to me, my first child had just been born, and she said, well, you have to get her name down for there's two schools. And if you don't get your daughter into one of these two schools, her life is over. And I said, well, we're sitting at a table here. It was a friend of mine was having a big celebration, and almost everyone there was reasonably well to do. And I said, now I look around this room and everyone here is rather successful. And I don't think any of them went to either of those two
Yeah.
schools. Like, are you sure? And I think there's a funny thing with parents where they get really focused on, like, if you're an investment banker, you think, well, I have to really get my child into investment banking. And it's like, well, what if they're not interested in
Yeah.
that?
Yeah. It's so funny you should say that, because the same parents go, oh my God, my kid's got to get into this. And what you're talking about, Patrick, is if they don't get into the right nursery school, they're not going to get into the right, grammar school. They're not going to get into the right high school. Oh my gosh, they're not going to get
And
into the
suddenly
right
they'll be
college.
living on the street
That's
somehow,
right.
like
They're
like
gonna
everyone in society who didn't go to those specific schools.
right, and then you look at the people who have done extraordinarily well, including the parents of that kid. I yeah, I've tended to notice that tends to happen more with the mom. The mother
Yeah, but
tends to
it's
more.
very it's a funny kind of type A behavior where you think the world is very much binary, you know, and also it relates to like your goal as a parent should probably be that your child be happy and that they pursue things that they find interesting rather than that they sort of pursue goals that you possibly had and didn't achieve
Yeah,
maybe.
they talk a lot about that. Intrinsic motivation to find out what someone is intrinsically motivated to do, which is to say, just for themselves. You know. Oh, I'm gonna tie it back to a question you said earlier. Um, so I know this is true for boys. I don't know whether it's true for other. I don't even know anymore. Girls, other genders, but I know it's true for boys. Is that if you read the biographies of famous people, I'm talking about men,
Mm,
you will see that before the age of 13, they will have declared what they wanted to get good at. Always
mm,
before the age of 13. And why is that a critical age? Because that's the age that where boys go through puberty. And all of a sudden you discover, dating and whatever else. And I want to impress people. Before that, there's a kind of innocence to the
mm.
to whatever it is they wanted to be good at.
Yeah, it's more childlike and
Yes, which
playful
goes
as
back
opposed
to
to focused.
yeah, and for other people, like if I get really good at this, then I'll get the girl, or then I'll get this, or I'll get and or I'll impress the other, my friends, and so if you want to know what like speaks to your heart, if you go back in time and think about when you were younger and what you loved to do, there was an innocence about those passions and pursuits that before you wanted to, it was an ego thing. Like
So
we
so your early ideas might be more pure, and then maybe the focus that comes as you get older can be applied to that and turn it into
absolutely.
something
Then
useful.
you
That's
bring,
an interesting
and I'm
idea.
not saying that, like as a kid you wanted to be a firefighter. Oh, then as an adult I want to become a firefighter. But clearly, oh, helping people, and
Yeah.
like, and by the way, speaking of like who self selects, I remember talking with a fellow, and he said it's scary how many people go into firefighting and policing who have an overly developed sense of risk seeking, not risk
Mm.
aversion. Like, and that's not a motivation. Obviously, you want with firefighters or policemen that they are seeking risk.
Yeah, yeah,
And so,
yeah.
not say all of them, but he said it was predominant and a bit of a concern.
Hmm.
And again, not for everyone, but the too many people who are risk seeking will pursue situations where they have that kind of the they're attracted to the emotional swings.
Yeah, that is so interesting. Yeah.
Yeah,
Well, I think I should probably wrap up the conversation. I could talk for the rest of the week here,
further
but
back.
we've probably I'm not sure how long we've an hour and 45 minutes might be enough for viewers at home. But
Yes,
thank you so much for coming on. If people are interested in your work, in your upcoming books, things like that, what's the best way for people to follow
I
you?
guess they can always DM me on Twitter.
Yeah,
X. I am Adam Robinson. It's the
yeah.
easiest thing to. They can just.
And when's the likely release of
So
your
I'm in
book?
fact I'm writing a final chapter, a warning that you're a warning to the readers that you will very likely want to ignore all the advice that's being stated here because you'll think, oh, that doesn't apply to me. So I'm in the process actually right now in London um, um, writing that chapter. So then it'll
Excellent.
be out next year, I guess. Yeah,
Excellent. Okay, well, we'll talk again soon.
I hope
And
so.
thank you so much for coming on. It's really been a pleasure.
Oh, a real joy, truly.
Thank you everyone for joining for this podcast episode. If you found it interesting, you should watch this video next. Don't forget to check out our sponsor, Compounded Daily, using the link in the description. Have a great day and talk to you again soon. Bye.